Hello, welcome everyone with an interesting subject, tax planning. But you know very well, you can't isolate tax planning and discuss only the tax planning without talking about tax compliance, because tax compliance is the foundation for tax planning, especially in the light of the current economical, social, and health challenges. Tax planning should be properly or uh, mainly backed by proper tax compliance. So, for the benefit of finding your correct tune, correct path, I have developed a few concepts, conceptual framework or models uh, for the taxpayers, and it will surely be helpful in approaching the tax planning of your corporate body. So let me share my presentation. Right. A logical approach to tax planning. A logical tax planning approach. It should be logical, of course, because most of the tax planning approach I have seen are not logical, to be frank, because it's like you're hiding your head in the sand. So most of the people will see it as an S. So don't let your tax planning to be seen like that. So make it a logical tax planning. So I hope this presentation will give some uh, beautiful and interesting thoughts for you to plan your taxes in your corporate environment. So let me get into my presentation. Right. It's a battle between compliance and planning. It's an everlasting battle. It was there yesterday, it is here now today, and it will be there forever until the tax is there in the dictionary. But one important thing, there should be a balance between these two. You can't go to the extreme of tax planning as well as to the extreme of tax compliance. So there should be a balance. This battle should be a balanced battle so that we can come to the extreme, or rather the best optimum level of tax planning as well as tax compliance. So how you find the correct tune, the correct balance? Is there any model design? So I had a thought. So with my more than 15 years experience in this field, so I developed a model matrix to for you to understand where you are and where you were and where you want to be. So this is the model that I was just talking about, the tax planning matrix, that actually uh, designed based on two dimensions, that is compliance as well as planning. So there are some companies whose compliance is high, and there are some companies whose compliance is low. Similarly, there are some companies or corporates, their planning is high. There are some companies planning is low. So based on these two dimensions, I have categorized uh, uh, most of, rather, corporates into four types of taxpayers. One is star, other one I would call bearish approach, the third one bullish approach, fourth one tortoise approach. So let me explain a bit. So there are some companies whose compliance is high as well as their planning is also high. To my experience, it's not more than 10% of the total corporates in Sri Lanka, maybe 5 to 10%, let's say 5 to 10%. So their planning is high, compliance is high, meaning that they are better off in the short run as well as long run. Why? Because long run, they are sustainable. They are sustainable in the sense, as a country we are better off, because we need more stars. The country needs more star companies, because when sustainable companies are there, when they are performing well, they are growing, the government, environment, economy, employment, all that will be improved. So therefore, that is good for the entire economy, not only the short term revenue, tax revenue. So therefore, always good to have star companies, star corporates who has high compliance as well as high uh, planning. If you go to the second approach, second type of taxpayers, they have high compliance, but their planning is low. Again, to my experience, it's about, again, less than 10%. We can just say 10%. Now, these companies, they are very strict on the tax compliance, but the tax planning part is little ignored. Like, so therefore, these companies need to improve their tax planning side. So, but in this type of taxpayers, what I would see is their short run is good, because in the short run they will not have any concerns, any issues from the revenue department or from any other parties. But in the long run, their sustainability is at a question, because if they are distributing majority of their income profits as tax expenses, that will lead to a sustainable issue. Because for you to run as a profitable, strong corporate, there should be sufficient earnings, there should be sufficient savings, investments, growth. So for you to grow internally, you need to have internal reserves, retained earnings. So proper planning is the lack in this bearish approach, but they can simply improve their level to a star by simply improving their tax planning strategies and approaches. The third one is a bullish approach. They are very strong, very smart, I would say, in tax planning, and sometimes they might be trying to take the advantage of each and every words concession given in these statutes, and each and every business model they may be trying to take the maximum tax advantage. But on the other hand, their compliance is low, their planning is high, their compliance is low. So when there is a low compliance and high planning, they are running at a risk, because gradually this strategy might lead to a tax evasion. So therefore, there should be a proper balance between tax planning and tax compliance. So this bullish, the companies that would fall under bullish approach can simply improve as a star by simply increasing their compliances. So that's, they have only to improve compliance requirements, so that they can uh, be a star. But again, here also they are better off in the short run, because they may be saving their income without paying taxes, or rather reduced taxes. But in the long run, their survival again is at a question, because when you are running in this space, there can be so many challenges, or rather so many uh, so many what do you call inland revenue queries, or other revenue department's queries, which might reveal some non-compliances as well. So down the line of your journey, you might have to encounter some issues which is not healthy for a good business life. So therefore, there again, as I mentioned earlier, it's good to move from bullish approach to star approach. So finally, tortoise approach. There are some companies whose compliance is very low, whose planning is also very low. So here, the bullish approach I have seen, to my experience, nearly 20 to 30%. Let's say 30% of the companies are like they are in the bullish approach. So balance 50%, I would say they do fall under the tortoise approach. So they have no planning, not no planning, but less planning and less compliance. So they are just running their business without concentrating on these two dimensions. But for them, it's little they need a little effort to improve their compliances as well as planning. So, but of course, they also can be a star by improving these two dimensions. So, right now, you might be wondering what this tax planning is, what this tax compliance is, how do we do, and all these questions might be in your head, right? Let me move into the next slide with this all these questions. The compliance. It's a very simple definition. You are complying with the laws and regulation of this land, right? Right. That's so simple that we all know, right? Right. Key areas that need to be complied with, especially from the perspective of the tax. When you are computing your liability, when you are filing your returns, maintaining source documents, making payments, uh, responding to inland revenue or other regulators requests, updating the regulators, other regulations such as transparency. There are so many regulatory requirements. But why all these? These are legal requirements. So therefore, you are bound to comply with those. As an example, if say if the revenue department requests certain information from you, that is requested under a specific statute. You'd have seen in all the letters the Inland Revenue Department sending to you, at the bottom of the letter, they have referred to a specific section because they are empowered to request information. So if they are empowered under a statute passed in the parliament, the crown, so you are bound to submit. You can't say no. So therefore, uh, all this, when you are from the computation to submitting information to giving information, giving making payments, with all that you have to be complied with, like including the recent developments such as transfer pricing, because transfer pricing, though it is still at the infant stage here in Sri Lanka, there are so many compliance lacks. So therefore, we'll have to increase our compliances by reducing these lapses, so that we can have a proper long run in this in your businesses. Right. Key benefits of compliance. Yeah, of course, there should be benefits for you to be attracted. Of course, smooth functioning of your operations. If you are complying properly, obvious first thing is that you will have a peaceful life without so many disturbances from the regulators. Easier to handle tax queries. Of course, you have your documents, you have your details, everything. You are in a better situation to submit whatever the requested information. Better relationship with the authorities, reputation. no less surprising tax assessments, less involvement of additional legal law consultation cost. Right, right. There are some cases uh, somewhere in 1990s still pending before the Supreme Court of Sri Lanka. So you see the involvement of your time, involvement of your money. Rather, why not invest in this your money and time in a new business? So, but if there is obvious interpretation issue, of course, you have to see the Supreme's view. Of course, we honor that. But see, first, if you comply with, there will be less issues, so less additional legal and consultation costs. Proper understanding of the tax picture. If you have a proper understanding of the tax picture, that is beneficial for your day-to-day functioning as well as strategic decision making. So greater support for tax planning, that's as I mentioned. So the foundation for tax planning is the compliance. First you comply, then start planning. So more strong your foundation, more stronger your planning. No fines or penalties, no time wasting on dispute resolutions, helpful for business planning, of course. You have a peaceful mind, you have a peaceful environment, and you have a clear vision, clear picture of where you are. So therefore, you can nicely plan your business as well. So there are some other benefits as well. These are the key benefits I see in proper tax planning. So tax planning, uh, it's always colorful, beautiful, and it's a very good topic to talk. So how to do it, who to do it, when to do it, all the questions uh, maybe in your head now. So let's see. It's not a matter of the tax statute and the uh, books of accounts. It's not a very narrow-minded game. It's a very broader-minded game. I would say it's a thinker's game, right? So, if you were to be a planner, tax planner, you have to be a broader-minded man, because with just knowledge of tax and accounts, you can't do tax planning for sure. So therefore, for the benefit of the taxpayers, corporate taxpayers, I have developed further model which uh, gives you the basic requirements of the tax planning team. What are they? The knowledge, experience, all that, right? First thing, knowledge on laws and regulations. Knowledge, experience, importantly. Knowledge, laws and regulation, yes, you should know the legal background, including tax statutes and other statutes, right? And you should have a proper understanding of the business model, not only the particular business, how they operate, where they operate, how to fund, right? How they are going to market the products, the administration procedure, sometimes the involvement of the information technology, all that, the broad understanding of the business model. Then macroeconomic variables. Why macroeconomic variables for the tax planning of my business? No, let's say you are going to invest in a new business. You have two options. You have a holding company, say, now you can fund through that holding company, say in Singapore, or else you can have local fundings. So currently foreign loans, the interest payments on foreign loans are exempted. But if you borrow locally, that local interest is taxable in the hands of the recipient. So from the very surface of this, I can recommend to go for foreign borrowings because it's tax free. So is it right? From those information, from that tax information, yes. But see, now dollar is appreciating at a higher pace. And once this import restriction is removed, the dollar will surely be appreciated at a very high rate. So therefore, now the saving on this foreign loan, that is exemption given on interest income of the foreign loans, is 5%. But you know, dollar appreciation rate averagely it's I think it's nearly 5%. Let's say 5%. So there will not be any saving in the broader sense. But from the tax narrow angle, there will be. But for the strategic planners, strategic thinkers will understand once the macroeconomic factors are considered, there would not be any benefit to the corporate. So therefore, there should be a proper understanding of the macroeconomic variables. Finally, last not least, ethical values, ethical framework, because ethics matters here. Because you are trying to plan, when you are trying to plan, there's a chance that you might be slip into the area of tax evasion, right? So therefore, you should have a proper boundary wall to protect yourself from going to tax evasion areas. So who has this knowledge base? Who has this experience, expertise? It's surely not in one person's mind. It's a teamwork for sure, right? So what is the team you are going to select here? So that's a crucial thing. So who should be involved in tax planning? It's not one person's game. It's not one division's game. It's not one director's game. It's not only senior management's game. It's a teamwork for sure. But from my experience, I would say it should be led by the CFO of the company and the tax expert, because CFO has a very broad understanding of the macroeconomic fundamentals, business model, and being an accountant, in a professional accountant. And also the tax expert, he has an understanding of the laws and regulations and ethical values. So therefore, it should be a teamwork, and it should be led by CFO and a tax expert with the immense support of others, maybe including IT, maybe including marketing, maybe including administration officers, etc. But CEO can, or rather CEO can decide the involvement of each and every party, and finally to have a better comprehensive, sustainable tax planning approach. Right. Now, if you are planning properly, right, your business, your transaction, everything, you will have these benefits. Reduction in your tax liability, of course. Minimum litigations, because you are planning with compliances, minimum litigations, productive investments. So shareholders' investments are productive because return on income, return on investments is high. So therefore, those are productive investments. So healthy growth, you have reserves, you retain your earnings, you can expand your business by using your retained earnings. And stability in the sense not only the company but also the country, because when your business is stable and functioning well, so the country is benefited in turn, because then country is also growing with the growth of the economic, or rather cooperates in the economy. Right. Broad areas of concern in reducing tax liability. Now, to reduce your tax liability within the legal framework, you can think of different strategies, but those can be categorized into different main headings, like utilization of exemptions, exclusions, utilization or rather application of lower tax rates, uh, capitalization on special deductions like enhanced capital allowances, etc. Different calculation methods like given in calculating VAT on financial services, the tax credits. So there are different and there are more. So you can think on. But of course, if you sit and think, you will find various ways and means of to reduce your tax liability, out of which there can be very good, very good strategies, right, without breaking any compliances. So therefore, so find the ways. If you sit, if a CFO sit with a tax expert, he will find more than 100 strategies surely, but at least there can be 5 to 10 strategies to reduce your liability, to reduce your tax expenditure. So therefore, it is not the strategies you are trying to execute, it is how, the question how you are going to execute, right? The approach matters, right? So finally, whose choice is it? It's the corporate leader's choice. Are you going to be lost situation, in a lost situation, or are you going to be in a clear-minded situation? So be specific, identify your strategies, think on it, evaluate. You can have complex situations, scenarios, but be clear on your strategies, be clear on your approach, right? If you are clear on your approach, your situations, no one can challenge. But if you are not clear on your approach, situation, strategies, anyone can challenge you. If you are clear, no one can challenge. So therefore, we are just about to start a fresh year 21-22. So be clear in your mind, be and have a strategic thinking here, and wish you all a very best and strategic full, thinkful, fruitful new year of assessment 21-22. So if you have any ideas that you need to be clear before the start of your fresh year, or rather during the year, you can contact me at any time, so that you can have a peaceful and profitful year. And of course, try to be a star. Try to be a star, because the country is in a need of stars. So try to be a star. Make your corporate a star with tax planning, with proper tax planning and proper tax compliance. Wish you all the very best. Thank you very much. And I wish to see you all with a interesting video like this in the near future. Right. Thank you again. Okay.